we're going to talk about some numbers. And Lalo, this is one I always love to look at statistics and trends and things of that nature. And we have one of my favorite folks on, and he has one of his good folks on, Ken Roberts. And Tatiana, what is what is your last name? I'm sorry.
No worries, Panzardi.
Panzardi?
Panzardi.
With
I
a
got
D.
it.
Yep.
Mm-hmm.
I usually botch everybody's last name, and Lalo has to really get my little backside out of the fire. The one that was worse was Ana Hinojosa. Did I say that one right?
You got that. You nailed it.
Yeah.
She probably will like that. Boy, did I and I embarrassed myself terribly. Anyway, okay, so Tatiana and Ken, but Lalo, I want to say that this is one that we've had some. I guess this would be another quarterly update for us that we try and have Ken on, right?
Yes, so we do have Ken on every quarter, and the numbers came out as soon as I'm actually like watching it, and it's like, okay, now it's time to invite Ken, and so he so he very graciously told me, well, they don't come out till whatever date it was, and I said, okay, soon after that, then, and so here we are. It's fresh data. Fresh numbers, and he said, I'm going to bring in my top analyst or someone who really is really good with numbers. And so we're talking to Ken and Tatiana from WorldCity. I don't know, do you go by that or US numbers or both?
WorldCity is by fine, but the website is ustradenumbers.com where all the data resides. A lot of it's public data. So
Great. So if you all have a chance or an opportunity to go visit that website and check the show notes for links, but we really do appreciate they come in here and they give us all this great information, and we sometimes joke around and play around with the numbers and what ifs and all that kind of stuff. But Ken, we'll leave that to you, and go ahead and enlighten us with this quarter's numbers.
Sure, Lalo and Andy, thanks for having me again. I'm excited to have Tatiana Panzardi join us here, and she's I'd say my right hand. That's exactly what she is. She's a quick study and really knows these numbers, and so we're going to run through this stuff together. And I thought, and first of all, I should congratulate you guys again on all the progress you've made over the years, and I think you're now ranked number 2 among podcasts on related international trade. I think that's right. Is that right?
Yeah. It's funny. I don't know. You need to start numbers on that too, Ken, because I have no idea where they're getting those numbers from, and so I'm glad people are saying that. So
it might be that the guys who were number 1 just needed to have somebody at number 2, and they gave it to you guys. Maybe that's exactly how that works. I don't know how that works.
It could be. It could be.
But anyway, no, you guys do a great job, and you've kept at it, for 4 years, and you provide a real service to the community, so it's great. So I'm gonna turn it over to Tatiana in just a minute. So I thought what we'd do is let Tatiana give you a nice overview of where we are. This is the 6-month data. That's why you have us back. It just was released a few days ago. She'll sort of give you a good 30,000 foot view where we are and what's going on. And then she'll turn over to me, and I'm going to talk about a couple of specific areas. One, we're sort of it's a race to the future, and how you can see that in the data. And there is we're sort of trying to cling to the past and how that shows up in the data. So I'm going to now turn over to Tatiana and let her, and both this, all this, I think a great deal of this will be using data on our website, ustradenumbers.com. So I'll turn over to Tatiana and let her roll with it.
And before you go into that too quick, for our listeners, there's going to be some things that we will show, so you need to look at this on our YouTube channel, right, Lalo?
Yes, that's the best way, yes. Unless you're watching this on LinkedIn, but if you are watching this on LinkedIn, it's really short 1-minute clips, so go watch it on YouTube, because that's where you'll see the whole visuals here.
So you'll get to hear this if you're listening to us on the audio side. And then come back and take a look at it on the YouTube. But Tatiana, why don't you take us away? I'm looking forward to seeing these trends. And one last comment. This is a podcast, folks, that this particular show, you need to listen to this from a strategic perspective. How's your company doing in compared to the overall imports and exports of the country and stuff like that? So Tatiana, you're up.
Sure. Thank you again, guys, for having us. I do love the trade data. I anxiously await it every month. So the latest data through June came out last month. And what we do is we analyze U.S. Census Bureau data that's collected by Customs and Border Patrol, by CBP. I just give that a little bit of background so you know where we're coming from. And I'm sure Ken has said it in the past. But the best way to say things and sum things up are always with a picture. And thank you for referencing to check this out on YouTube, because then you can really see these tables and graphics and understand that full picture. And right now, what we're looking at is U.S. trade is up through the first 6 months. And we're looking at dollar value, which is the best way to compare all of our airports, seaports, and border crossings. It's up the first 6 months, 5.04%. Exports have been up this year. Right now, they're up 15.19%. So that's U.S. exports increasing. And Ken will go into that a little bit when he talks about the deficit. While imports are actually year to date, they're slightly down 1.87. I will make a note, they were down a little bit more through the month of May, but this month of June, imports increased 28.84%. So just the month of June really increased those imports, and that decrease total for the year to date, even though slightly down, is faring a little bit better. And that's what you can see here in this graphic, right? Where you're looking at the very bottom one is year to date, June through 2026. So accumulating those first 6 months, you can see the growth in U.S. trade happening. Through that growth, we can tie it back to, obviously, our exports are up and our imports are slightly down, but you'll see Kendall talked about those particular imports and commodities there. What I should mention as well here is within those airports, seaports, and border crossings, right now, what we are showing is that Port Laredo is again number one as a U.S. airport seaport. Last year, number one and number two were JFK and Chicago O'Hare were the two leading ports in the U.S. Before that, it was Laredo. So Laredo again is number one, and I'll show you what that looks like. But I referenced that just to get into the mindset of what's happening on our national level. JFK is slightly is down, so it's a little bit knocked off of that top list. So when we're looking at all of that trade, I'll show you how those ports then stack up for the total year to date. And then if Ken has any comments, I'm sure he will jump in as well. So again, Chicago is still ranking highly among U.S. airports, seaports, border crossings. JFK year to date is number 3. Port of Los Angeles, number 4. Port of Houston. Again, this is year to date by value, all the ports themselves in the U.S. And when we're looking at all these different ports, just for the month of June, you'll see that there's a shift there with Port of Los Angeles now ranking in the top 3. And again, this is, like I said, by value. If we're looking at tonnage, it would be different. I'm not looking at containerized data or anything else. This is all by U.S. value. When we're shifting over to our U.S. trade partners, I'm sure you guys have heard a few times now, Mexico is definitely our number 1 U.S. trade partner, not just by imports, but also by exports. So it's a trifecta that's happening with Mexico, 1111, of course. Number 2 right now is Canada, then China year to date. But what is also happening in this is we're having some other Asian nations come in. In the past, we've had Germany as one of our higher ranking trade partners, but you'll see that shift is happening here. Mexico, Canada, China, Taiwan, Vietnam, Japan. And Ken recently wrote a Forbes article about this as well that I would reference, and I won't go too much into it. I do recommend you go to Forbes.com and Ken Roberts, and you can read a little bit more on that there as well.
I will say that I'm kind of surprised. 1, 2, 3, 4, 5, 6. The number 7 is South Korea. They've jumped up above Germany. That's moving up. I'm sorry. Go ahead. I just like I was surprised in that. Usually, you've got China, Mexico, and Canada being the top 3, and they interchange at times. But Mexico's definitely dominating right now. And then it's Japan and Germany, and they usually trade off on number 4 and 5 position. But I'm surprised that South Korea is up in there.
Yeah, a lot of cars and a lot of energy. Yeah.
Yeah.
Mm-hmm. Yeah. that's definitely what they.
And a free trade agreement.
Mhm.
Yeah. Oh yeah. Okay. Sorry, I didn't mean to. I
That's
was
good.
No
just
worries. So I think that's the lay of the top trade partners, the top ports. I can break it down further and go over what's going on with the ports themselves right now, and we are seeing a big increase on ports that are obviously moving particular commodities in the U.S., which is air. We're seeing some winners there, of course. Venezuela was one of our fastest growing trade partners. But now we're looking at other Asian nations, including Thailand, Taiwan, and Hong Kong. And then we're seeing, of course, across the border in Texas, some growth in right there in El Paso, Laredo, El Paso, as at the Isleta Zaragoza International Bridge. Then we have Santa Teresa growing as well, Detroit and El Paso Bridge itself. Those are the 5, fastest growing bridges for ports, seaports: Houston, Corpus Christi, Beaumont, Texas, New Orleans, and Port of South Louisiana. Those 5 are the fastest growing, and that's really all energy, as you guys are familiar. For the air, the fastest growing, since I gave you the 2 other modes of transportation, we have LAX, DFW, Anchorage, San Fran, and Cleveland Hopkins are the largest growing airports right now in the U.S. So a big mix of what's happening with these different trade partners as well, as you saw, because South Korea, of course, is growing, and some of these ports do that business as well.
excellent.
You ready for me?
Yep.
All right. So I'm going to talk about, I'm going to play off of what Tatiana talked about. So she mentioned that she showed that O'Hare, I think, was the busiest airport, or mentioned that the busiest port in the United States last year. And JFK was number 2. And that's the first time ever an airport has finished number 1. For many, many years, Port of Los Angeles was number 1.
Mm-hmm.
And then along came President Trump and the tariffs, and that upended that. And at that same time, Laredo had been growing as a gateway for trade with Mexico, and now handles about 40% of that trade. And so Laredo was elevated to the top, and Laredo's trade grew handsomely last year, but O'Hare and Kennedy grew very rapidly. So I'll skip what was going on at Kennedy, but it largely involved gold trade, and I think we talked about that probably last time, if I had to guess. And O'Hare was 2 things. One, it was GLP-1 drugs. The new miracle drug doesn't just help you with diabetes, but helps you lose weight and get your cholesterol under control, and make you taller and richer and all that kind of good stuff. So they're pouring in from Ireland all by into O'Hare. But I'm going to talk about computers and sort of what I call the race to the future, and then I'll move on to passenger vehicle trade, and that's sort of clinging to the past. So let me share my screen for a minute here, and I'll probably keep it up for a while. So computer imports.
Wow.
Look at that growth. So that's I'm on the month of June. Let me switch to year to date, because it's sort of where we should be. So year to date, look at that. So from about 2013 to 2023, even 2024, moderate growth, relatively consistent, right? So along comes artificial intelligence, and along comes multi-billion-dollar investments by Meta and Google, Facebook, Microsoft, Oracle, and whoever I forget, Amazon. And they're making these multi-billion-dollar investments. And so in this category called computers is servers. And so that growth from 24 6 months of the year to 25, I think, is about 45%, something like that. And you're thinking, holy smokes. And then you look at this year, it's almost double.
Yeah.
It's almost doubling. Okay.
What we're looking at, just for our listeners, is that the imports of computers year over year, June 2025 versus June 2026.
This is year to date. So first 6 months of this year compared to
first 6 months. I'm sorry.
That's
so
right.
It's 101.4 billion last year, and it's 194.44 billion this year. Oh my gosh. That's obviously you're talking about the race to the future.
This is the race to the future.
AI data centers and all that kind of stuff.
And we're getting some pushback on some of those data centers, right? You're getting some of that pushback on some of those, but these things are massive. And I don't know about you guys, but I use AI every day. Whether it's to settle a bar bet or to understand how to deal with a health problem, whatever it might be, because it's sort of like Google on steroids, right? You used to ask Google and get 10 possible answers. Now you ask AI and you get the answer. Now you got to check it and research a little bit still, but it's pretty amazing, right? What it can do. So what did that cause? So this is last year. So when we think about what we import into this country for the last quarter century, it's been one of two things that were number one. It was either oil or it was cars. Last year, for the first time, it was computers. More valuable than the oil, all the oil imports, and more valuable than car imports as well. It's really, and look at cell phones, number 3. So it's pretty shocking. So that's how significant a sea change this is. It's not small.
And Ken, we're talking computers in general, not necessarily just consumer computers, right? We're talking about servers. We're talking about it's
laptops, it's tablets, it's desktops, but it's servers is what's really happening.
I think that jump was definitely servers.
It's almost all servers. It's all AI related to build these big data centers.
Right.
That's what's going on there. It's all AI to build data centers. I was talking about computers, and there's all of our imports in 2025. Right? Computers are number one for the first time ever, as I mentioned. And then going to year to date, now it's computers and cell phones. So again, the race to the future, right? More than passenger vehicles, more than oil. And computer parts are right there around the corner. So now let's switch to another tab here, and share this tab instead. Okay. And so there's the ranking of the ports, which Tatiana shared with you. And then here's the ranking of countries. And this is what I was going to tell you, that Taiwan is almost at the same percentage of U.S. trade as China. Think about that. China used to have, before the trade war, China was about 18% of all our U.S. imports.
I was going to say, though, I was going to ask, on your computers, would that include chips?
It would be a different category.
Okay.
Yeah. Now let me see if I can. Let me see if I can see it on here. Let's go back to this tab here and see if we can see the computer. There's computer parts, and let me see if I can find there's computer chips right there.
Okay. All right. Okay. So of all imports, that's 1.5% of all imports. That's
correct. $26 billion of that. And then where's computer parts, another 71 billion, and computers, another 194 billion.
Well, 3 out of the top 10 are something having to do with computers.
And I mean, I hate to say it, but these days you can include cars in that, because I don't know about your car, but cars are running computers now, right?
Exactly.
So, all right. So that's sort of the race to the future, how it's reordered. It's sort of reordered what our top imports are. It's had an impact on the trade deficit because that has flooded in. It's had an impact on, top port and so forth. So let's now look at another category, and that's going to be passenger vehicles. Okay, this is imports of passenger vehicles. And what you notice is that in 2024, it was a record first 6 months of the year, 107, first time over $100 billion in 6 months. But since then, 25 and 26, those imports are down. Now, why is that? Because we put tariffs on those imports, because we want to have more cars manufactured in the U.S. and sold in the U.S., right? That's the goal. Mm-hmm. But at the same time, we put tariffs on imports of aluminum and steel, which are going to be used in those cars. And that's why you saw the average price of, let's see if I have that clip here. Here we go. So new record, average new car prices surpassed $50,000 because you're blocking them on the import side and you're making it more expensive to produce them on the domestic side. So let's now then take a look back at this slide here. So for the last 2 years, those have gone down from 107 billion down to 84, almost at $85 billion.
I'll mention one thing. When we're looking at these commodities, we're looking at the 4-digit HS code, which is the harmonized tariff code, which is what we're looking at with IEEPA tariffs, right? That's that numerical system. So that's why you see the computer chips and computers all apart. They could fall under, I believe it's HS code 87 at the 2-digit level, Ken. Is that right for computers?
Yes.
So they fall under 87, but we break them down further.
So this just shows you the drop month by month. But here's the countries where we get our cars from. And Mexico is number 1, Japan number 2, South Korea, Canada, Germany. United Kingdom, and remember those countries. So because it'll be important for a second. So those are the countries that are going to be affected by this drop in imports. And as you can see, this chart here, for those who don't see this, this chart shows the top 10 and what their change is year over year. And so Mexico's down 15%, almost more than. Japan's down 11%, South Korea down almost 4.5%, Canada down almost 14.5%, Germany down 20%, United Kingdom down 17%. So it's across the board, the decrease in those imports from all those countries. And here's the ports that are involved. That's what I was going to show you a minute ago, but it looks like those pages were in the spin mode. So these are the ports year to date that are the biggest ports. So Baltimore, Detroit, Ambassador Bridge, and the question may be, is the new Gordie Howe Bridge going to be separated in the data? I begged them to make a request that be done, but I don't think that's going to be done. So I think in the future, we're going to have to change this name from Detroit Ambassador Bridge, which was the privately owned bridge for many years. And it was a great private bridge to own because that's how things came in from Canada, in and out of Canada. Now there's another big bridge that Canada essentially built called Gordie Howe Bridge. As many of you know, he was the star for the Detroit Red Wings for many years. So it was a very appropriate name for a bridge from Canada to the U.S. Port of Brunswick, Georgia is a huge vehicle port. And then Port Laredo, all the Mexican vehicles, and Hueneme in California. And as you will see, all these are experiencing a decline. Baltimore down 17%, Detroit down 13%, Brunswick down 15, 16%, Laredo down almost 14%, Hueneme down about 9%. They're all experiencing a decline in the imports of those vehicles because of the tariffs. And again, on some level, that was the goal. See if, here we go. So here's Baltimore. There's Detroit. We're on years. Let's go to year to date so you can see it. So Detroit's not doing so terribly. This is overall trade, not just vehicles. So this is exports. We're going to switch over to exports. Let me see if I was hoping Brunswick would have showed yet. Oh, here we go. Here's Brunswick. So Brunswick, the reason I wanted to show you Brunswick, because Brunswick really depends on exports, imports and exports of cars. And you can see what's happened in Brunswick. It's just on the border with Florida, south of Savannah. So big drops in those. This is all trade, but it really depends on vehicles. And I can show you that if we scroll down our page past some of this data. So on exports, 80% sorry, is passenger vehicles. So really dependent on that. And on imports, on the year to date here, it's 77%. So they really, really depend on those vehicles. Hueneme is not quite as dependent, but you can see their trade has suffered a little bit year to date, although it's caught up a little bit in June. That was what I switched from. But let's scroll all the way down here to their exports. Passenger vehicles are 20. Oh, so for the year to date, they're not even number one anymore. They're down to 12%. Okay. And if you look at it last year, I'm going to switch to last year's data. They were at almost 15%. So they've lost a little ground there in terms of relative value with all exports. But look at the import side. 80% of their imports are passenger vehicles. So those tariffs are really hurting some of these smaller ports. But let's look at exports then. Let me share that tab. And let's look what happens. So at the same time our imports are down, our exports are down. Okay. So that's not good news. And let's look at, we'll skip down to, oh, by the way, this is kind of interesting. Here's COVID, by the way. I always like to show people where COVID is. So who's our market for passenger vehicles? Remember those countries we're looking at for imports of vehicles? They're some of the same countries: Canada, Germany, Mexico, China, South Korea, some of the same countries. And those exports are down because at the same time we're bringing fewer in, we're sending fewer out to those countries. So Canada down 13.5%, Germany down slightly, 2%. Mexico's up, South Korea's up, China down 40%, UAE down 52%. So you're seeing some problems there, and that's going to affect these ports that I already went through that you saw on the import side. They're the same ports. So in case some of your listeners or viewers may not know, certain ports specialize in vehicles. It takes a special kind of ship, I call a roll-on ship that opens sort of underneath, if you will, as opposed to containers on top. And so those so Wainimi and Brunswick are two in particular, Jacksonville to some extent. Detroit's a bridge, obviously. So that gives you a sense of what's going on there. So let me see what this tab is. This tab is, I don't know what this tab's for. Oh, I see. Here we go. So I think I've gone through this already. So that'd be my sort of end point, is that, at the same time, there was an article, I don't know how many of your viewers or listeners pay attention to read the Wall Street Journal, but they just had an article in the Journal yesterday talking about how good the U.S. war with Iran was, because what has it done to gas prices? It's lifted gas prices. What is China making a full bore push on? Is electric vehicles. And we have now eliminated the Biden era benefits to selling those vehicles in this country. So electric vehicle exports from China in the first 6 months of this year, remember I showed you our vehicle exports, they're down. Their electric vehicle exports are up 120% in the first 6 months of the year. That's a phenomenal increase. And I'll give you a few other data points from the article. So they make 29-30% of the EV sales in the world now. And more than half of all the cars in China are EVs. Now, I don't know if you know this, but for many years, GM's largest market for car sales, including the US, was China. We sell a lot of cars in China, but we're losing that. So EV sales have been falling in the US because of the changes in the tax law. And so we're sort of making our bet on cars using gasoline and oil, right? And those are leading exports. Let me see if I have, let me share, I'll share this chart with you quickly because it's kind of a helpful chart to sort of think about this. I think it's this one. So this is our exports, right? So civilian aircraft and parts, that's mainly a Boeing story. For most of the last 25 or more years, that's been the leading export from this country. But oil is now our number 2 export. Now, as more and more people make the conversion to EV or hybrid vehicles, that's not great for us. But we have changed the geopolitical dynamic with all this energy that we're exporting now, right? We're the largest producer and I think exporter of oil of any country in the world now, which if you're as old as I am, and at least a couple of people on this are, we remember when there was virtually no oil. I mean, not a lot of oil produced in this country, right? We were enormously dependent on that oil. We now are exporting enormous amounts of oil. We're exporting enormous amounts of gasoline. And after gold, which is another story, the number 5 export through June is LNG, natural gas, LNG, right? And that's where we showed we could really pivot, and Europe showed it could pivot because a lot of those exports of that LNG are going from the Gulf Coast here over into Europe. Because why? Because Europe stopped accepting pipeline gas from Russia when the Ukraine war started. But anyway, so that's a quick look at how, as we race to the future with AI, with all these computers, and we sort of try to cling to the past with oil and gas powered cars, how technology can point the way forward sometimes, but our politics sometimes will run counter to that. So that's what I've got now. See, we're pretty much bumping up against our time here. So I did pretty well on the time, I think.
Well, the one thing too in this last chart, I noticed that was it the number 7 is the low value shipments, which would that'd be your e-commerce type thing. That's as far as exports go. So there's people buying, U.S. products and it's being shipped out. So that's interesting.
Yeah.
So, one of the things I was looking at too is figuring out, and the general rule seems to be that for every $1 billion of trade equates to 10,000 jobs. So when we're talking about these numbers, let's bringing it back around, is figuring out with what you were saying year to date. So far, we've got about 29.9, almost 30 million jobs tied into imports and exports. Into as far as the effect here. So that's all, it's quite a bit.
There's a slight chance the U.S. will top $6 trillion in trade this year, which, I mean, we just topped $5 trillion a few years ago. And I was stuck. We did that because when I started, $2 trillion was a big deal. I guess I'm aging myself, but $2 trillion was a big deal. Then 3, then 4, then 5. I mean, it's amazing.
We have record trade this year, and June has been a record month for trade for the U.S. Highest trade month, June.
Some of that's inflation. Some of it's related to energy pricing, and a lot of it's related to all these computer servers. And gold trade is another story.
Yeah, well, and the other is some of the new trade deals that have been agreed to, and some of that is coming through. So here's where I was going to say for our listeners, you can get kind of bogged down and it's like kind of lose it on some of these when we're talking about numbers. But folks, one of the things you need to look at, especially if you are in the executive level, small business owner and all that, what's all this mean? This means is even from a legal perspective, you're dealing with contracts and that. You need to look to see where the hot buttons are for the countries. If we're exporting, what are countries importing? What do they want? And from a U.S. perspective, if you're in some of these commodities, you look at it, you need to be looking at breaking into some of those countries and expanding your markets. On the flip side of that is your sourcing. Or you're importing. What is it that U.S. companies are needing? One of the things that I noticed, Ken, on your list of top commodities that are imports, we were talking about so much, and I think Lalo, you said like the top 3 of the top 10 are computer related, with the chips and the computers and the hardware, and then you got cell phones, which I would think some of these data centers are having, cellular communications, probably in that kind of realm.
And that category includes parts that make cellular phones work, by the way. And it's a big piece of it.
And it's huge. Well, one of the other things too is I noticed on that was the insulated cable was a big category. Well, these data centers, I mean, you're laying out lots of cable and connecting all these servers together and all that. So all that comes into play if you are a small business owner, a medium business owner, or whatever, and you're looking for markets. This is some of the stuff that you need to be tapping into.
Right. Yeah.
Yeah. Try that. That's a better way of putting it. Yeah. Well, Ken, Tatiana, thank you so much for all of this. There is so much more into this. You definitely need to look at this from a YouTube perspective. Secondly, we'll have the links to Ken and Tatiana and their company in our show notes, because this is something, again, look at it. I highly, this isn't like a commercial for you guys in a sense, but I'm like, seriously, WorldCity Publishing, it is definitely worth your time and effort to look at it. And Ken, you're still writing articles for
Forbes website.
For Forbes, yeah.
Supposed to write 5 a month. I don't always get to 5, but I posted one this morning on the trade deficit and how hard it is to eliminate the trade deficit, and how it's sort of bedeviled many presidents before President Trump. And he's the one that certainly put a lot of energy into it, and pulled all the tools out of the toolbox he can think of. But as long as America is such a big economy and we want so much stuff, it's tough. It's usually a sign of a robust economy when the deficit is going up, sadly, but it is the truth. So I wrote sort of how it's gone up the last 4 months in a row. So
it's phenomenal. Yeah. Well, thank you so much, you two, for being on with us. Lalo, any closing thoughts from you?
No, none at all. I mean, I really enjoy these. I like to just sit back and listen to all of this, because it's very fascinating. And I know if we had 2 or 3 hours to talk about this, we still would run out of time. But this is really good update, and amazed that you're able to put all this in 30 minutes or so. So thank you very much, both of you, Tatiana and Ken. And we really appreciate you coming on our show.
No, it's been a great time. Thanks for having us.
Absolutely.
Folks, like us, share us. Thank you for your listenership. And with that, Have a great day.